I think this is one of the most overlooked benefits to algo trading. And if you're a manual trader right now and you're struggling, you're inconsistent, you're spending lots of time at the charts and you're not getting the results that you want, this video could open your eyes a little bit to a different form of trading. It doesn't mean you have to completely stop manual trading if you enjoy it, but if something's not getting you the results that you want, if you're not consistent, you're not where you want to be, if you're the same place now as you were 6 months ago, I'd consider at least approaching a different way to trading. So the biggest benefit for me to algo trading is the time aspect. To put it in context, I started this new account just about a month ago. No, it's less than a month ago. It was 3 weeks ago with 100K. The account is set up now. It's currently 7K in profit. So it's 7% up in the last 3 weeks or so. And every single position, every single algorithm with this particular portfolio that I've built, which is only 5 strategies. It's normally about 20 to 30 for me, but this one is a little bit different the way I've set it up. So it's done 7% in a month, and these have then been copy traded over to my various prop firm accounts. And I have not looked at this account. I've not managed this account. It's just sat on a VPS doing its thing. Now, you can see the trade history over the past few weeks. Started with the 100K here, and the win rate's roughly, I don't know, what's that, 60% win rate. The average return is 2 to 1. So it is profitable strategy. And every single one of these positions was executed on these various assets without me having to be there. All the code is built into the background. And again, I didn't have to build the code. It's all built into the background. Now, if you think of making 7% per month on any asset, that's really good. On any trading strategy, that's really good. But to do it without having to be there is even better. Now, most people who trade have full-time work obligations. They have family obligations that when you want to be trading, your attention has to be elsewhere. What I used to do when I was working corporate and trading at the same time is I used to have to stop and pull over my car to look at a chart setup and to try and enter quickly because I wanted to be in the market. But obviously that's not a viable way to execute trading strategy. If you are a manual trader, you need to have all of your attention focused 100%, and you need lots of chart time. And for most people, that's really hard to dedicate the time to. With this skill set of this type of trading, it's once you've built the strategies, once you've built the logic for entries and exits, it's very much hands off. Like I said, this has been trading a month now. It's one of my many different portfolios I run. It's 7% up, and I've been away for the last week and I haven't checked anything, and I've just come back and seen since I've been away, it's probably up 1%. So yeah, it just goes to show that this type of trading, I think, is more suited to most people. Now, the benefit of trading algorithmically, secondly, is it removes the human error. So if you're going back to my last example, you're thinking of you have work obligations, family obligations, and you want to be in the market. You have a limited time window to trade, so you force an execution. This then leads to human error, and it leads to a lack of edge, and ultimately a lack of results in the market. Because when you enter a trade manually, your state, your mind, you're completely different to the last time that you entered. You may have had a busy day at work, or stress, or you may be feeling elation. It doesn't matter what you're feeling, you are different. And when you are different, subconsciously, you can't control it, you will execute differently. And when you execute differently every time, it leads to, again, a lack of consistency and a lack of results, which ultimately leads to a lack of money being made from the trading market. So the time aspect and the psychological aspect are two of the main things that people struggle with. And I speak to people a lot who join my programs, who don't join my programs. And what they say more than anything else is the human error and the psychology aspect. They enter positions they know they shouldn't. They cut positions short that they should have held. They hold on to positions too long that they could have cut short. Then the lack of trading time window, they then want to be in the market because they want to trade, which then again leads to making silly decisions, which leads to losing which leads to inconsistency. So then they change their strategy, or they jump around to a different YouTube video or a different strategy, or they add in more indicators and layers to try and fix the problem by plastering over it. They don't have the real solution to the problem. And the real solution to the problem, if you are in a position where you have other obligations, is to, one, remove yourself from the equation, and secondly, is to remove the human error from the equation. And you can only do that, in my opinion, trading algorithmically. And algorithmic trading doesn't mean that you have to be a coder. It doesn't mean that you have to have all these different skill sets. It just means that you trade based on statistics, probabilities, and data, as opposed to discretion. Right now, I'm in a potential sell position on the German DAX. And it doesn't matter if it gets triggered or not. That's just the position that I'm currently in. So if I walk you through that position, so if price hits the 23323 level, which is signifies this green line down here, if price does get down there, then I'll be triggered into a sell stop. It doesn't matter how it gets down there. If I was trading manually, I'd want to see obviously this gap being filled first before then selling off, because that's what we're taught as manual traders. But it doesn't matter algorithmically. It could be short of this gap and then trigger a sell stop. It doesn't matter how it happens. Again, that's adding my bias into the equation. So we'll see if it actually gets down to this level or not. And then the red line signifies then the stop loss for this position. And the take profit on this position, it's a trailing stop. So it's not based on fixed percentage, or it's not based on fixed pip. It would be a trailing stop position based on ATR. That's for the sell German DAX. Now for my other strategies, maybe the NASDAQ, maybe the other DAX, or even the USD JPY, they may have different entry criteria. They'll have different position sizing. Everything's different because, again, it's based on portfolio correlation. But the point I'm trying to make is it doesn't matter how we get entered into these trades, because the algorithm and the logic takes care of that. But me being in this position and all my future positions, I remove the two biggest limiting factors to trading success, and that's time and human error or psychology. Those are the two main things. Anyone can have a good string of trades, a good month, a good year, but to do it consistently, to do it really consistently, to be able to draw income from the markets, I think most people are going to struggle when they trade manually. That's just a matter of the fact. You just have to look at the statistics of the data that's out there. So the data that's out there right now is there's around about 9.2 million retail traders in the world. Of those 9.2 million, the vast majority, I think 8.5 million, trade manually. And of those 8.5 million, more than 8 million are consistently losing. So it's like the definition of insanity is doing the same thing over and over again and expecting a different result. Most people are trading manually. Most people are losing. If you remove the time aspect and you remove the psychology and human error aspect, you're going to have a better edge in the market and you will eventually have better results. That's just my opinion. So I hope that makes sense. And you can learn how we trade algorithmically without having to learn how to code or do any of that sort of stuff. There'll be a link somewhere in or around this video. So happy trading.